cost, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Well, guys, we are back with Chris Pulver. Yields are spiking, dollar is up, and Chris, what is going on? How's it going, man?
It's going well. Happy Monday. I'm looking at some positions on the Qs this morning, Nick. I talked about this just in a session I wrapped up. So we have a lot of indecision going on that collecting some premium is actually pretty difficult on a day-to-day basis. I was looking at doing like a SPY strangle today. I think it was going to pay me about 10 cents, 15 cents. No thanks.
Yeah.
And so I see the Qs as this is one index that I'm not in. This week, as we kick off Q2 and we have non-farm payroll, I saw, the PMI numbers just came out. This was the services PMI today, correct?
Yeah. No, this is manufacturing
today. Yeah. Manufacturing today. And the services come out
is it
tomorrow or Wednesday to Wednesday?
Wednesday.
Yep. And the services expected to stay above 50. So the first big print in manufacturing PMI over 50 is a big deal.
Yeah.
Yeah. So anywho, I think that I mean, the melt up continues till it doesn't. I mean, the way I'm looking at it, I guess the hard part is like if I'm trying to play around, I was messing around with this position this morning. If I look at a kind of neutral position on the NASDAQ or the QQQ, here's a position I'm contemplating right now. It's not the best when it comes to reward to risk. I can certainly make it a little bit more favorable, but I could do this slightly more like neutral. So if I did like the 447.50 and the 446, let's see here, 440. If I went up to 460 on the sell side, they give me 1250 of upside. And if I did 446 by 434, so I could do this. I could pay 695 on the debit for about a $500 max profit. Probability is about 57%. The expected move for the Qs is around $12 and change. And if I basically position myself where I'm long at 447.50 or long at 446, we get that $12 move from current price. That should allow me to get to my, my sell levels, or at least on the edge of those. Now, this expiration would go out to the 12th. So I think that if I'm going to position for this, I think that the Qs, give myself out to next week, let the market digest this week as we kick things off with Q2, let it digest the PMI numbers, let it digest also non-farm payroll on Friday. I think the Qs either are able to break the highs, or we come back in and retest, where I think this floor is pretty obvious on the Qs around 432. So to me, that's where the bulls are defending this. If they break below 432, then we're talking a faster, deeper, uglier correction. But if you look at the weekly time frame here, there's a lot of indecision going on right now. So we have 1, 2, 3, 4, 5. The last 6 weeks, I'd say there's a lot of indecision where, I mean, it could just barely inch up higher. We could very quickly correct back down here, but inside candles, that's kind of my point, is we could have a lot of inside candles in here where the market doesn't really do anything. And I don't know, it's a tough one, man, because I want to just sell options and collect the premium, but if I sell it, I've got to make all these adjustments because we're still going higher, or we have a quick correction to the downside. I want to make sure I'm positioned for that. It's not that expensive to go out 2 weeks, so that might be my play today.
Yeah, kind of interesting, Chris. I mean, we've got some strong economic data, and clearly some strong economic data. I was just checking to see on my end, like what the reaction here has been so far. And, Dow doesn't love it. S&P doesn't love it. So it's showing you that we're kind of in this camp right now, at least, of strong economic data is not necessarily just outright bullish for the market. There was a little bit of recent, bias tended towards good jobs, good, numbers in general. The market loved it. Market kept ripping. I'm very curious to see today where we end today, Chris, because if we end lower today, I would say that's a change in behavior that we haven't had in a while. Usually the trend, at least, has been recently, every time economic data comes out strong, yes, the market kind of has a little bit of a tumble, but then by the end of the day, it just rips back. And it's like, well, this is, not going to kill the story for rate cuts. And that's been the theme. If you get something today where you have this is the first positive, I said it earlier, first positive manufacturing PMI numbers since October of 2022. If that reaction here today, just straight up good news in terms of the economy, essentially keeps the S&P 500 towards its, low of its daily range. I would argue that that could be an early signal that a bigger pullback is coming. Now, again, I've been saying that for some time, so I don't want to sound like a broken record, but I would say that that is pretty objectively a different behavior than we've had recently. I mean, you can see pretty much every dip, by the end of the day, there's buyers stepping back in. If that
Correct.
changes, you might have a little bit of change in behavior that's actually observable.
Yeah, and again, I mean, the last I think this morning I looked at, there's 21 candles we've had since our bottom in October, and we have had 17 of 21 candles finish green. The red candles you can see are just like little blips. There's not really any dramatic pullbacks.
Right.
2 massive indecision candles, 3 massive indecision candles. Like the bulls tried to win it back that week, right there during that mid-February week. So the bears have just been unable to really take the upper hand. So I mean, I want a correction just to have the technicals make some sense. I did take some profit this morning on gold, Nick. I know we talked a lot about this the last couple of weeks. Yep. So we had a gap higher.
Perfectly then.
Yep. So we had a gap higher. So I was watching this. So as I looked at XAU, this was my first measured move, right? So first measured move around 2270. I think you talked about it. What was your specific number last week? Was it 2270? Was it 22? It was right there. We were pretty much
2280, I think.
Okay. So we're right there, and I saw GLD with a pre-market around 208, and it opened up right around 208 and change. I closed out. So I had a 210 call that was against my 190s. So I had a 190 call. 210 was going to be my max, so that would have been about a $20 max profit on my call side. I closed it out for 1736. That was 1738. So of my max profit at 20, unless I rolled it, 17.36 divided by 20. I closed out for about 87% of that profit. Now my total position ended up being about 159% on what I paid for the original call option. So at least for right now, it's a nice chunk of profit. I'm going to take it, and I'm looking to reestablish. I mean, I think any dip or pullback is totally fine for me for getting back in. I mean, as long as gold to me remains like GLD above 195, I'll keep buying it. Yep. So I want to stay long gold, but just I think it was a good, especially being long the option and having time on my side. I want to say my expiration initially. Let me look at my positions here. So GLD, yeah, I mean, my gold option was out to May 17th. So if I was out to January, I'd be less inclined to take the profit, but I was only out to May. That time premium, I want to make sure that I collect some of that in addition to the gains I've had on the long side. So happy with that overall. And now I'm looking to reestablish. I'm really kind of at a loss. I think I might do like QQQ today to see if I can justify, go in both directions and get a position that looks something like this on the QQQ. Yep. I'm just going to play around with the sell legs to see where I can max my profit out. I'm probably going to go out to the 12th to give myself not just this week, but also next week. And if I can price this in where, okay, I pay, $7, let's say for the debit, but over 2 weeks, can I get at least a $12 to $13 move? Yeah, I think that's the case. It's just a matter of how can I be happy with like having upside that's a little bit more favorable. So that's
I hear you, Chris, on the difficulty there. I think I wanted to also follow up with when it comes to the Q specifically, the NASDAQ, right? So for those of you guys who are not as bilingual as Chris is with all the different ways you can call the NASDAQ, the Qs that he's referencing are, of course, the NASDAQ 100 CFD that a lot of our non-US traders are listening to. But I wanted to add something there. So I mentioned a second ago that this hot data, good news being looked at as potentially bad news for the stock market, is interesting. But when I actually step back and I look at it, I am not somebody who thinks that the market, there are people who think this way and there are people who do not think this way, but I don't think that the market has to have, rate cuts to continue to do just fine. I'm not a person that's like, oh, look, good news, you're not going to get your rate cuts and the market's going to tumble. Like, I'm not actually in that line of thinking, but I know that there are a lot of traders who are. So I want to see some of those people get a little bit concerned. That's where I've been mentioning the pullback. I want there to be a bear case. I want there to be this resurgence of, I don't think we're going to get 3 rate cuts anymore. I think we're going to maybe get 1. I want that story to come back in so that that crowd gets a little bit concerned. They sell their shares, they sell their positions, and I can buy that pullback. Because again, I don't think that the growth of these really solid companies, these big tech companies, relies on 25, 75 basis points in the Fed funds rate. I think they're going to do just fine overall. Will the economy have troubles? That's a bigger debate. But in terms of like the old adage for buying companies, right? You want to buy good companies regardless of the environment. You want to buy a good company that can change its sales no matter what the wind is doing, right? So that's the old adage of buying good areas of the market. And for me, I do like tech, but I do think that, I want that concern around rate cuts to creep back in to give us that pullback. And again, it might not come, but I've maintained over and over on the show, I'm not short in the indices. I'm just a little cash heavy waiting for pullback. So we'll see. But I just wanted to define that, Chris, with this good news is kind of being treated like bad news in some way in terms of the stock market's reaction this morning.
Yeah, I talked about also we had the entire month of April with very little Fed speak, right? There's no FOMC rate decision. There's nothing about.
Yeah, we've just got meeting minutes. That's it.
Just meeting minutes on the what is this,
10th.
third Wednesday?
Yeah.
Yeah. So we have, if I'm not mistaken, we have CPI data next week.
Yep.
CPI data next week on the 10th.
So that's the day, Chris. We definitely got to have you come on the show. That's going to be a banger of a day.
That will be. Also, are we battling that day too? I think we've got the trading battle going on.
We mentioned it. We mentioned it too. I don't know if they sent an email, but we're planning on. I was talking to Chandler and James about. I think we're going to do an all-day stream. So it's going to be a blast. It's going to be a heavy one. So
nice.
You of course are more than welcome to join for part of it, or as much as you want. Really, it's going to be more than enough to go around. Anyways, keep going with your point. Got CPI.
Sure. So I was we have CPI data coming out. This is another reason that if I decided to go out to the 12th on my Q's expiration, which two things I might do. So I might look at extending my SPY trade and do a little volatility, play with reverse iron condor, just a fancy way of, it looks like this. This is essentially how I'm positioning, where as long as I get a move up or down, I'm just trying not to overpay for the option. So if it goes up a little bit, goes down a little bit, once we start to rally on the downside or the upside, like this is my profit. That's where I max myself out. I'm going to play around with those sell legs, but I think I like this trade out to the 12th because this is what I try to plan around. Is I like these kind of 1 to 2 week windows, but with this calendar for this week, we digest a lot. Sometimes non-farm is a big event, sometimes it's not. But next week with CPI, I'd like to think it's a little bit more volatile. I mean, it's going to be another reason for the market to kind of move ahead of the Fed. There's no Fed speak this week outside of the minutes, which come out on the what? Did I just pass that? The minutes on, where am I looking? I'm
10th. Ahead. Yep.
The 10th. Yeah. So the 10th is a big one with US CPI and the meeting minutes. Plus we have BOC rate decision.
Yeah.
But from there it's silent. And May 1st is like, the Fed schedule is so odd now that, okay, we have 0 April Fed, but we have May 1st, which gets ahead of all the data. And there's still, the probability is the highest that there's still going to be a pause in May. And like you're saying, that bear case is the market right now after what Powell said last FOMC is that there's going to be 3 cuts. That's what the market's anticipating. So it'd be 1 in June, 1 in September, and 1 in November. Those are going to be your 3 cuts to get us down somewhere around 75 basis points lower than current price.
Yep.
That's the anticipation. So if that gets cut, definitively cut, where the market's like, oh, fudge, we're not going to have a cut, or we're not going to have, this cut, or I don't know. If that shifts, then yeah, there's the case where the market can very quickly rip to the downside and make up for the technical correction. Now, here's one chart I think we have to be aware of. Qs are going to be quiet, man. I mean, look, I think this is a pretty big range on NVIDIA. Part of me, I mean, I'm not going to take this trade, but I'm curious just for fun. What does this actually look like?
Like a little bit of a strangle action,
like an iron condor in this one. If I look at 970, let's take a look at this. Let's go NVDA.
Would you do a condor, Chris?
Probably a condor. Okay. So there's that way it's defined. And I'll see what the upside looks like.
That way you don't get stuck with a short position or stuck with a long position. Okay.
Exactly. And also, so this is interesting too. I could get an expiration out here. So I go out 46 days. The earnings on NVIDIA is May 22nd. So we might have very little movement on NVIDIA prior to earnings. I mean, at this point, the big catalyst has been, right out of the gate momentum and then earnings, and that fueled this big high all the way up to 970. So if I did a tighter iron condor, let's say May 17th, man, the expected move is so high up there. But if
Yeah.
I took a bold play, and I could probably, limit the downside here. If I said, you know what, we're not going to go above 970 or 975, I'll give it a chance. So let's say that I sold the 975 and I buy the 980. So here's the good and the bad. The good is I can collect $1.58 on that trade as long as price respects the high that I just showed on the chart. The downside is I collect $1.60, but I'm still risking $3.40. Now, on the downside, as long as we don't go below 855, I can collect a little bit more premium for that. 855, and I'll do an 850 by 845. Now, this isn't too bad, Nick. I could get something for around $3 and change and only risk about $1.80. So
Yep.
the reward to risk on the trade is pretty decent. And my intention with this trade would be I'd be out of it prior to earnings. The downside is there's enough implied volatility going into that earnings that I might not get much more than 25% take profit on this. This is probably not going to be a credit that goes to, 50 cents or less. This is probably going to be still trading at $2.50 to $3 because then implied volatility coming into earnings will be so high.
Yeah, that's an interesting point. NVIDIA earnings last time were just so volatile. The other, Meta last time around was a showstopper. So earnings season, I think I'm with you in terms of like where the Qs are going, where the NASDAQ is probably going to go. It's probably going to take a break because again, NASDAQ does its own thing. Real quick, I'll show my screen. Look at the divergence here in the stories being told on the day. So the NASDAQ, well, it's coming down as I make my point, of course, but check this out. So the S&P 500, flat to red, the rate sensitive areas like the Russell, down hard. But then the NASDAQ doing kind of its own thing. It's not in the red. It's actually positive on the day. So you brought up that point about like specifically the NASDAQ not making a big move because it needs those earnings catalysts. That's really what got the NASDAQ here. That's what's going to either keep it or reverse it. It's not going to be, in my opinion, so Fed centric as perhaps like the Russell will be. The Russell is totally at the whim of what interest rates or expectations are. And again, case in point right now, look at yields flying. Chris, this is not great for my TLT trade. I was looking so good. It was so pretty up here. I had sold puts at 93 and I was up almost like $600 or $700 on that put, but it's come all the way back. But I'm sticking with my original thesis. I wouldn't mind owning some TLT in the portfolio. And I still have plenty of time till expiration. So it could go against me further. Or it could kind of reverse, but we'll see how TLT. Are you watching TLT at all?
I am. So I was thinking of you this morning looking at it because I saw the big gap to the downside. I still like the trade overall. And this so I did. So I'm trying to think what day it was when we talked about it, Nick. I know we were on a lot last week, but I looked at doing like a longer term diagonal spread on TLT and I couldn't get filled. I was trying to pull the trigger. Like I think I was going out for, 10 or 11 months to do like a $14 debit and I could sell probably 45 to 50 cents against it every 30 to 45 days.
So you might get your champ here, right?
Well, that's what I'm saying is I might be able to get the, the in the money call that I want. And I wouldn't be surprised if we see this type of structure here. So we're respecting that level. If we just kind of match this, connect these lows, let's say that TLT, and this is where I'm really interested. Your put is like 93. Is that right? 92.50?
93.
Okay. 93. Okay. So I really like this $90 level. I really like, so I would probably look at a credit spread off a 90. Or if I'm at 90, I would go even deeper and still go like an in the money call option here and see if I can lower that cost basis, because it would have given me the way that I structured the trade last week. It would have been like an 80, I want to say like an 85 or an $84 long call. My break even would have been around 98, but I was out until January of 2026. I was going way out in the future, and just trying to take all the time to sell against it. So I might still look at that trade, but I think it was a little illiquid because I was going,
that's way out there. Yeah,
it was way out there. But I'm like, look, man, the one thing, if I'm going to pay for this option, it was maybe $1 different from 1 year additional expiration. So that to me, that makes sense because I buy myself all that extra time, and that also gives me more instances to sell against it. So I did the math last week. I could have taken my, let's say, $14 debit. I could have taken it down to maybe $11 or $10 net, which means I probably end up owning the TLT. If I want to exercise it, it'd be like low 90s anyway. And I do think that, TLT does have a bigger move coming to the upside. It's just how well can we time it?
Yeah, that's
I don't
right.
think we get a double bottom though. I think your position is totally good. If you get assigned, obviously at 93, are you gonna wheel strategy that if you get
Yeah,
assigned,
I'll
you
probably just
take it
sell
and
calls
flip it in?
against it.
Okay. Yeah,
Yeah,
I like
so
it.
it's one that I'm willing to work with, and it's really, to be honest, it's like the most boring, option sort of thing you could possibly do is TLT, but I'm okay with it. I have a more exciting one that I can show you too.
Okay.
FXI, that is the Chinese stock
Yep.
market.
Yep.
It's not a ginormous position in my account, but I've got 2,000 shares of FXI that I got filled on with the wheel strategy. This is going to be my second time selling covered calls, my third overall time collecting premium on this position. I'm looking at, I'm looking at a decent position here because I've got the $25 strike price on FXI. I'll show you that chart here just for fun. Here we'll go FXI. So FXI, again, $25 is just is not too far away, but I would love if it rips and keeps going because this was a trade from the beginning. I've collected a lot more premium than I thought I might even. So 3 months of collecting premium, and I'm up on the shares, so I'm not complaining at all. 22.90 is my average price. I've got a strike price at 25 here, and the premium on this thing is pretty dang good because of course you're taking on a lot of risk with Chinese stocks. So we'll see how that goes, but that's another trade I've got in the wheel strategy side of things. And with the VIX up here today, 5.62%, it's not quite where I'm ready to get involved with more, but I'll keep my eyes open. If the VIX keeps going up, might actually be able to get some sell puts and sell covered calls kind of going with the wheel side. So
Yeah,
I
I
love
do like
that.
that.
I love that transition.
I listened to some interesting stuff this weekend. I've been, waiting patiently for some China play. I do have some exposure with options. I'm long on FXI with some credit spreads. I do have some naked puts on FXI as well. KWEB is another one. This is large cap. So
Yep.
this is a tech ETF and larger tech. I mean, I was looking for like this major support around 2150 or so. We're probably not coming back to that. Same type of thing. I mean, as long as we stay above $24, $23, KWEB looks pretty good as well. I still really like Alibaba and I like Baidu. I'm in a pretty good position on both of them where credit spreads are fine for me to get some just basic exposure. But man, I might look at another roll. I've got a covered call at $100 on Baidu out to the end of this month. That if it gets called away at 100, I'm going to make $5.29 a share. So
Okay.
I've done a pretty good job rolling this thing out, lowering the cost basis. Where I think I took the assignment at like $100, and just a matter of maybe a month or so, I've lowered the cost basis to 94.71. So,
Yep.
and I mean, this is my upside potential. So I was kind of hoping that we would hold this level here and actually have a chance to still play. If it dips down lower and we can buy just this crazy, ridiculous support at 80, and I would be long, no problem, no questions asked. I'd be long. But if we start to get a break above, and we're pretty close to seeing this confirmation, let's say we get to like 112 or 115, we get Baidu to show this level. I like that directional play towards 157.
Yeah. I think that's the thing, Chris, is like if China just rebound, we had some good numbers, I believe, over the weekend. I think they had a good something. I can't remember what the number was. They had strong numbers over the weekend. And the point I'm trying to make with that is that if China is sort of bottoming out, that's going to be a crazy trade to watch over the coming years. I feel like I could watch back. I could be right to get called away if I get called away, or totally wrong in the sense that maybe in 3 years from now, China's ripped 100%. And I took this tiny little profit where I could have, but hindsight is 2020. I wouldn't mind if I get taken out of FXI. It's been a nice trade for me, but if it keeps me in the position, I'll also just kind of keep it going and lower my cost basis, just like you've mentioned with Baidu. So really interesting stuff there. Chris, I'm going to step out. I believe Frank just stepped in, so he might hang out with you here in just a moment. But before we bring him in, if you don't mind, I'm just going to run a quick sponsor break, and then we'll come back, set everything up with you and Frank to keep going. Is that cool?
Sounds good.
All right, be right back. We'll run a quick break, and then Frank and Chris are going to keep going with the show. Stick around, guys. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering a 7-day free trial and 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
Hello, Chris.
What's up, Frank? How are you,
Hey,
man?
how's it going?
Good, dude. Hey, go ahead and run some commentary. I'm getting some trades filled. I'll talk through them in just a second. Just I've got 3 more accounts to get filled.
Okay.
So what are
sounds
you looking
good.
at this morning?
So I will ask you when you're ready, but I'm looking at Nike and Apple, and I wanted to get your thoughts at some point today.
Okay.
So Nike is just really hurting, and
Yes.
I don't really keep up with them. I don't really know what's going on. So I was wondering if you could walk me through that when you're ready, but I was wondering if it had to do with China or anything like that. I know there's some issue with China and Apple currently, and it continues to lag. And I keep in mind this is a weekly chart. So what you saw with Nike was a pretty tremendous decline, and Apple is more so range bound in the past several months since the summer of last year. Price is going from 166 to 198 or something. Just not really any growth I see on these stocks, but I see Nike really hurting, and I'm wondering, um, would you think of doing some sort of call or put spread if you were looking to I guess maybe either get assigned or have like some sort of vertical, or if you're just looking on volatility and not really trying to get into these stocks at all. I was
Yeah, let me
wondering.
see. Nike had an interesting earnings play not too
Yeah,
long ago. That was, I looked at it here for 609 debit, and the thing dropped, from 100 down to 93. That would have been like a 50 cent to $1 credit, like the day after earnings came out. Let's take a look at the weekly time frame. So the one thing with Nike, so we've had some interesting like divergences on all these retailers. Some that I've been watching over the recent, let's say, last 2 years. Nike's certainly been one of them. Nordstrom, JWN. This one looks postured very differently, right? Like Nike's been up at those highs and starting to fade. Then you look at one like JWN, which is sitting here building some really strong support right around that 1250 levels, trading around $20. And this is another one where I think a retailer could possibly make a comeback, where this support, holding, and JWN looking for some upside, maybe to like $30 to $35. So just positioning differently. I think Abercrombie and Fish is it Abercrombie.
I think it's Amber.
Abercrombie. Okay. Look at this one. Very different than Nike, huh? Lows
Yeah,
at $17, trading at 128. This thing is up, 500, 600% in the last. That's just nuts, isn't it? And then look at AEO, American Eagle. Big difference. It's like, I don't know what separates an AEO or an Abercrombie from a Nike outside of maybe it's just crazy value, where it's like it's just cheap, and there's a good enough rip earlier in the year that when a stock's trading at $10, there's a lot of upside potential, at least for a squeeze. So anyway, let's go to Nike. Nike clearly would be a little bit more resilient as far as longer term, but if I bring in some, let me bring in some snowflake analysis here on NKE. And here's what Nike does well. So earnings forecast to grow 9.61%, reliable dividend, which isn't a lot, but 1.57. Honestly, it's probably just issues in China with supply. It could be, I mean, I don't think it's labor costs in China. I think it's just maybe knockoffs and the whole, like, black market or whatever of Nike, Nike fraud product. But I mean, I don't know. I can look more into it. I mean, just throwing it at me for right now. There's definitely a little bit more of a deep dive that I want to go into. However, I will say this: I wouldn't be surprised if Nike at this point, if we just go sideways. That's our COVID low, and I will say this: any stock that comes back to a 2020 low, I'm pretty interested in buying. I mean,
Yeah,
so do I see
it's
Nike
getting
getting too much
close.
lower? No, not necessarily. I mean, there's levels here around 85. I've got a chart along there for a reason. If I look at Nike right now and we have 91.76, the way I'd probably get started on this, Frank, would be this. If I did, let me go to trade for Nike and look out probably this May expiration. I don't see any earnings on here. We can go to the calendar as well on TradingView, see when earnings print. So the next earnings report that I see here is not until June. So I can get a full cycle in here, get a 45-day window, do something kind of out of the money like that 90 strike, a 90 by 87.50. That's not great, but it's not terrible. That's probably how I'd get started, because with a credit spread, I could also take the assignment.
Right.
I'm willing to. I mean, I could get 70 cents this is trading at a 38.25 delta. If I want to go out of the money here, I could do a 15 delta. I mean, this is obviously a lot different, but the odds of assignment here, an 85 by 80, odds of assignment probably slim to none, to be honest.
Right.
But I kind of like this one here, where it's like, if I was assigned at 90, I mean, we can see like an at the money call can get you, $2 to $3 going out 45 days. So if I got assigned, I could lower my cost basis within 45 days by probably $2 or $3. So this wouldn't be a bad one. I could afford to take the shares if I wanted to, and afford to flip it. This COVID low was $60. I mean, that'd be a little bit damaging to position if I took an assignment at 90. But if I did take a $90 assignment, I just think off of 85, we're in really good shape to, like, I'd be long Nike at 85.
I think 60 is a little aggressive. If you go
I don't think I'm
to
coming to
the
60.
weekly chart,
Yeah,
if you look at what I'm looking at, there's a long trend line that started with that COVID low, and then in
I see what you're
22,
saying.
yeah, and so this week is breaking below that trend line. But
Yep.
what if, say, at the end of this week, that weekly candle has come back up and you see some sort of hammer?
Yeah.
It closes like right at the trend line or a little above. What would you be thinking then? Would you think maybe a long play from here instead of waiting for your I guess $80 assignment?
Well, here's the deal: is I don't have to wait for anything if I just did a credit spread. If I took a trade right now and I do like the 90 by 87.50, I can get 75 cents credit. I can get I mean, I don't mind doing something like, I'm trying to think how many shares would I be willing to take if I'm getting assigned at $90, probably no more than 200 shares for me, just for as far as buying power goes. So I could do this. I mean, I could risk 350 to get 150. $90 is my strike. I mean, we're not at $90. We're at 91, 91.70. I think there's some downward pressure. Let me see what this news says here. Nike executive. So we have a new executive.
It's a new CFO, yeah.
Yep, new CFO. Nike maintained overweight by Morgan. Okay. I guess let me see if there's any FinViz like upgrades, downgrades on Nike. I mean, it's been under some pressure. Let's see what they say for NKE in here. So we have waving red flag for the stock market. Largest shoe companies in the world, Nike or Lululemon, they both got beat up really badly during earnings. Let's see. I mean, like, I'll say this. We can get into the weeds of fundamentals. I can get into valuations, but the reality is this: if they're going to grow and they're going to have cash, I mean, let's look at the fundamentals. They have a ton of cash. Okay, they have manageable amounts of debt. Earnings next year 8.1. Earnings next 5 years 13.53. I just they do check a lot of boxes. It's a household name. It's a household brand. I don't see Nike necessarily being a terrible position ever. And the reality is, okay, Frank. So let's say, think about this. I get a chance to own Nike at a 50% discount. That's where it's at right now. It's already 50% down off the all-time highs. So I'm not saying that I need to hold on to Nike and have it come back 100% to get to these all-time highs again. But I am saying that if I did a position now with a $90 strike, that you're right. If we have a green candle here, we're probably putting in a bit of a bottom, and this trend line support holds. You could also do something really simple with just the moving averages. So do we have like the death cross coming? Like the daily chart shows we're down below the 200. We've got the 50 crossing over the 200. That death cross happened back here in February 2022. But I could see us range bound. Let's see on the weekly time frame where those levels are at. So we just had the 50 cross the 200. Yeah, we're kind of taking the play that we got to believe that Nike is going to be resilient. And part of me thinks that we will. I mean, are we going back to COVID levels? Probably not.
I don't think so.
But I do think that if I put a $90 strike in, I've got to be willing to take an assignment because I think I'm going to get one. If we have any downside, two good things, right? I could own the shares at a 50+% discount from all-time highs, which isn't a bad thing. It's a company that's forecasted to grow. Dividends, fine, but it has cash on hand. It has the ability to weather the storm. But I think if I'm waiting for the sign to get green, I mean, you might be talking about Nike back up at 95 or $100. If I'm looking at it now where it's been falling, man, the Ivy rank is 8.1. That's so low, dude. Like, what is up with these Ivy ranks are so low right now.
What is an IV rank?
Well, that's just looking at like the change in like 30-day implied volatility. So it's just like we're in an environment where the IV is just contracting. I mean, for example, I was talking to Nick this morning. I looked at doing just a straight up strangle on the SPY, and it would have paid me 15 cents for today. Like, it's a 0 DTE, I understand, but still, I mean, even going out like to the end of the week, it was going to pay like $2.
Are you saying to stay within a range?
To stay within a range. So like today, for example, let me float out let me park this here. So if I float out so the SPX is dropping, we're down about 20 points on the day, which means the SPY has moved about $2 today. So we had highs around 524. We're sitting here around 522. I could possibly, this is a potential trade for the morning. I might do this on my personal account here. So if I did a SPX, are we getting back to 5270 today? And this is just something for today. But if I did a 5270 bear call spread, let me take a look and see where we're at for just today's expiration. 5270 might be a tall order. I can get 45 cents for that, but I'm only going to get 10 cents to do a bear call spread. Like, that's this 20 cents. I get 20 cents today on a bear call spread on the SPX, which is a $5,000 instrument. So, I mean, again, Ivy rank 16.9. It's just selling premium. And the difference is if I went out 30, 45 days, it'll be normal, but like a 0 DTE or single day, it's not great. I don't want to get too much tighter than that, because if price were to, find a low, I could see, and this is what Mondays are very common for. Let's say we sell off from the high to low today, and then we come all the way back up. And then all we did on the day was this, right? I mean, I'd be better off doing something where I'm going to say, you know what, this level or this level, we shouldn't go much lower than this on a Monday. So maybe I look at that instead. Would we go too much lower than 5230? Let me take a look. I can do that, 5230 for an iron condor. So I could take this. I could take this trade on the day. That's still a little flirty with me, but think I'm going to take this trade, dude. It only cost me, so my max risk buying power $400. I think I'm going to take a chance on this 52.30, which is right in here. We don't come up back to 52.70. All right, dude, I'm going to take this trade. So I'm going after a 105 credit on the SPX. Let me see if I can get it today. I'll take this all the way to expiration. So this will be my account right here. $1 not filling. Come on, 95 cents. Oh, you got to be kidding me.
The spreads keep changing.
It's okay. I got filled at 95. So
Okay.
I did a little iron condor on the SPX today. So 52.70 and 52.30 is my line in the sand. 52.70, which is right here, and 52.30 right here. So if we sell off 20 points and we stay within that range today, then I'll have full profit and full profit. I'll make 95 cents today. And that closes, that's cash settled at the end of the day. So fingers crossed.
I hope it works out. I'm in something that's not, it's not similar, but it's a bullish bull call spread on SMH.
SMH, okay.
So I'm long semis this week.
Okay.
I got a 230 buy call.
All right.
And then a 232.5 sell call.
So 230. So you're long 230, and then a 232.50.
Yep.
Okay. What's the total debit on that?
115.
All right. So 115 debit for $1.35 upside. What's your expiration this week?
Yeah, this Friday.
Okay. SMH. It's pretty good, dude. Friday trade. You got the 230 long.
Tell me what you really think.
No, I mean, I think that you're similar to what we talked about last week. I mean, this is different than if you did like a straddle where it was, if you bought the 227 and then sold the 232, like that gives you $5 of upside. You're paying 223. If you did the 225, give yourself $7.50 of upside, paying 386. Maybe a slightly higher delta call would be slightly better. You're in for a debit, you said, of $1.15, so you're down 20 cents right now. But I would say on the daily time frame here, I mean, obviously you know what you need to have, right? You need to have price just drift higher this week. That's it.
Right.
I mean, it's a black and white trade. There's no plan B. If it doesn't work, it doesn't work. I mean, you're down $1.15. If you're going out to this Friday, I don't really know if there's a time to make a decision on it, but I think it's not bad. I mean, you are giving yourself slight upside. I mean, $1.35 net profit versus $1.15 risk. If we stay where we are, that's not good enough. You want to get price up here towards 231 and change. So you essentially are asking for SMH to want to make more of an attempt to test the highs. We test the highs, it's fine.
Yeah.
What are your thoughts on this? I'm not playing devil's advocate here, but I'm saying that if we went out another week or two, right? Like another week or two, and you did a bear call spread off of that 240 high, where it's like the market put in a bit of a top here. I mean, NVIDIA looks the exact same, right? NVIDIA put in that big high. NVIDIA is just kind of range bound. I talked about that this morning. I don't see NVIDIA being fantastic either.
I don't know if I would do that. It's hard to say right now.
Yeah.
To me, it just looks like they want to keep pushing higher.
Yeah.
And until this is tested and rejected or broken is when I would feel like I want to make some sort of decision. So
Sure.
239 and some change is broken. That looks really good to me. I don't know if I would want to do a bear call spread or a bear put spread. But if it also broke, I don't know if I would want to do a bull call spread. I think upside is pretty limited on a weekly basis. So maybe go out a couple weeks, although I don't usually do more than like 2 weeks. So
yeah,
I don't know if price comes down to here too. I would say this is the range from 240 to 212 and some change. This area right here, consolidation for me. I think it could bounce back and forth. Nvidia, I think, is pretty much near its peak, but I don't think that they're quite ready to fall yet, in my
No, I,
opinion.
I
So
agree. And I just did this. I dragged a fib from this low to this high. And a very common behavior here is if we have the 236 or we have like a 30% retracement level, which we almost did, we hit the 236. So I wouldn't be surprised if we have this, Frank, if we have the 236 tested and this market comes back and retests the highs. That's probably a higher probability than getting a deeper pullback. So I think
yeah,
you're right as far as buying the dip. What might happen on that dip is that we might just struggle to break the highs. We might go, dip and then the kind of the dead cat bounce where it doesn't quite break the highs. But I think you're right. Like that dip area is more likely to kind of drift and try. It's like the attempt would be, can we test the highs? And if we do, then your trade is in profit. If we obviously fail to break the highs, hopefully it gets up there where the attempt is valiant enough to get us up into the high 230s where it gets your trade in profit. So
yeah.
I'll be cheering that one on for you.
Thank you. And I'm worried though because the market's reacting kind of mixed to what we saw this morning in PMI.
Agree.
To me, it seemed bullish for risk appetite. I thought an expansion above 50 would be a good sign. Yet things are not moving the way I thought they would, and what you said about implied volatility makes a lot of sense. Like the volume seems kind of low. Nothing's really moving, but also nothing's really. It doesn't look bullish. So I don't
Agree.
know what your thoughts were on that.
It would be so I think about this. If you have a rocket that's in orbit, right? And all of a sudden let's say that at this point the jetpack got kicked off, and then at this point the jetpack got kicked off. What's it do from there?
You
It
just
just
drift.
drifts, right? And I think that's where we're at, is we're kind of in that drifting phase where we drift and we either need to find that like auxiliary booster to give this thing another leg higher, or we are going to start rounding out for a bit more of a correction. And
Right.
and from the technical side, I mean, 17 to 21 weeks bullish is pretty darn bullish. And so if we're rounding out some highs and we have some inside sideways candles, and this is what I see more structure wise. I see this as an easier read on the cues, where this is a range that's really easy to spot. I mean, we've had about 5 or 6 weeks now where we can't break this high, we can't break this low. I could see more trading in here on the cues, which to me looks like a perfect candidate to just sell the cues and just do an iron condor. But timing wise, if I go out, if I go out with the probability of, okay, this is for this week or next week, I can probably do an iron condor on the cues, but my premium is going to be absolute garbage. I mean, so let's look at it right now. And by the way, I did a trade. This is the trade that I took this morning. Let me double check my numbers here. So that was the SPX fill for me. And then let me look at the QQQ. So I had a 447 by 445. Let me change this here. I'll bring the risk analysis profile up in just a second. So 445 on the put to 430, 447 to 457. Okay, so this is correct. All right, so this is a trade that I did on the Qs. It looks like, man, I'm really skewed to the downside, but what I am skewed to the downside for is this is still, if I go to the upside, I'm still giving myself $10 of profit here. So if I did the 447 call and the 457, I still have $10 of profit right there for max. Now on the put side, I agree that if we had a little bit of a shed to this downside, the lows on the Qs that I'm interested in, 432. That's a technical price, and so I'm selling the 430, which does give me from a 445. I mean, that gives me $15 here. So I have $15 of max profit on the put side, $10 max on the upside. You can see here that we're already starting to drift a little bit lower. I'm going out to next Friday. So I think that if we digest this first week of the quarter, digest non-farm payroll, we have two PMI numbers coming out this week, but we get into next week, we have CPI, plus we have Fed minutes, I think next week. And it just gives me a little bit more time. And I paid $6.90. So I paid $6.90 for the debit. If I can get the Qs, which average about $13 a week, if I can get them to move $6.90 in the next 2 weeks, I think that probably is high enough that we start ramping up to the downside. I do think if we shed some gains on the Nasdaq or shed some gains in the market, the downside is going to be faster, right? The bear side will be more aggressive, a bit more of a scare. And I think we could drop, 8 to 10 points very quickly on the Qs if we have more of this kind of turbulence to the downside.
And
So anyway,
I,
I mean, the Qs to me
I
look
agree.
easier to read as far as the indecision, but we could quickly run right back to these lows at 432. And so that's what I'm positioning for. If we hit that level, that would give me $13 a movement or so. That's enough for me to take profit on this trade going out to the 12th. I do have a position on the SPY as well. I'm going to look to kind of get the same thing going on this. So I've got the 4-5 expiration. I'm trading pretty much right at the money on the bull call and the bear put. So I might look at another 412 expiration on the SPY, and I can price that out right now, actually, if I did a 522. So let me look at this. So like I said, I need to go out for trades like this. It's like I need to go out probably 2 weeks, because this week I don't think there's enough time to say, hey, it has to move, $6 or $7 this week. I mean, last week, man, the SPY only moved like $6. And
Yeah.
the Qs were about the same. It's like we had quiet trading week, which I understand it was a short week and holiday trading and whatnot, but still, like, I thought the market should be a little bit more volatile than what it is. So let me look at the 12th. And right now I'm trading at 520 and change. If I buy the 523, so let me go out here. If I buy the 523, I buy the 522. Expected move, it shows here 804 for the next 2 weeks. The average is around $10 and change for a weekly ATR. On the upside, I think we're capped to the upside, but I'm going to give myself a runway here. I'll sell the 533. On the downside, 522. Where's my SPY at? That's 509. So I think I'm going to sell the 510 or the 509 and give myself a little bit more downside potential. 510 or 509. That gives me, so right there. So I could do this trade right here, pay $6 for it, 6 and change. If I win, I win 573's max profit. That's probably on the call side. I could maybe shift this down a little bit. So 634, that increases that's a 1-to-1. So if I win on the put side, that's probably where I'm going to get paid the most, is I'll make the most money on the put side. On the call side, I can max out at 10. I pay, 630. So I just think that I think the upside is limited right now. At least that's what it feels like. And a correction is likely due. But anything can happen. I think if anything, I'm talking out loud here, but I'm trying to buy myself some time. I want volatility. That's it. I want volatility up or down. Quickest volatility and ugliest volatility is probably going to be the downside. If we have a big, like I said, a big shedding, we kind of peak out here. We have a big ugly move. Like, look at these candles here, Frank. I mean, those are big, ugly red candles. They finish indecisive, but that's what I can see the market doing, is like having this big red candle and then finishing like this, right? Where like the bears have their fun and then the bulls just buy it right back up and we buy the dip, something like that.
Yeah.
So,
So
but
I,
taking
I, I
advantage of that.
wanted to look at something too on the NAS. If you
Okay.
pull up Qs or just NAS 100,
Yep.
these, look at how many days of no volatility. This is what, 6 days? 7?
1, 2, 3, 4. That's the weekly. Yeah, we've got a lot more than that. Very quiet. Yeah. We have 1, 2, 3, 4, 5, 6, 7. 7 days. Very little movement.
Yeah. So an
Yep.
entire week of price just not moving.
Yep.
This, what you're saying about the nasty move to the downside, I think if we hit this level, if we hit this trend line, I'm very certain that we're building up towards some major move here. And the fact that the bulls aren't taking it higher
Mm-hmm.
is like, yeah, the drifting phase. I do think that this past week has kind of shown that regardless of the economic news, we're kind of still adrift. So I don't know if any good news is going to be good for the market. I think stuff has got to they've got to unload. I think Nvidia's got to kind of come back down and be more of a discount. Um, And yeah, I think in the short term we're gonna maybe see some big moves to the downside before we
I
see
think
the
so
gold
too.
step back in.
I think so. And again, I mean, we say big, but think about this. I think it's relative because a big move is truly this. I mean, if we can't break the highs and a big move is down here to 430 or 432, I mean, I'd say this Nvidia gap still is a very attractive level for the bulls to step back in and say, okay, we've got a chance to play the bounce. But look at the percentage. If we go from this all-time high into that Nvidia gap, that's now almost a 4% correction, right? So think
Right.
about like a healthy bull market, 3, 5, 7. Those are all like percentage correction levels that if we hit those milestones, like there's eager buyers awaiting. So I mean, a 4, let's say we fill the Nvidia gap, a 4 to 5% correction on the Qs would offer up some pretty enticing buy trades. And I'd say the same thing on the SPY. I mean, the SPY is way further away from the Nvidia gaps. If we corrected on the SPY and we find the Nvidia gaps, now we're talking 4 to 5%. I mean, I'm not going to lie. I would love to see a 4%, 5% correction in the market because the way I'm trading it, where this is my strategy, if this is my play right here, right? If this is my trade right now and it goes lower, I get paid more money to the downside because I think we can get there faster. If I do the SPY, I'm about to take this trade in the SPY as well. Let me build this one out. 1, 2, 3, 4. I had the trade already running. It's pending at a 634 debit. So it'd be a 522 and 3. So I'd buy out to the 12th. 522, 523 on the call side, and a 522 on the put side. And I think I sold the 509. I'll double check that on my Tasty account. So 509. And then I did a $10 upside here. So 523 to 533. I think that's about right. 523 by 533, 522 by 509. That's obviously
The
not right.
strangle
I need
right
I
there.
need to sell these. Yeah, I need to sell these. There. So 522 and change. If we get up to 529 and we get down to 515, so I need about a $7 move, which isn't actually true. I need about a $6.30 move. So I need a $6 move. If I get a $6 move on break even, I'm going out 2 weeks. The average ATR is about $10 to $11 on the SPY for the weekly. So over the next 2 weeks, can I get a $10 to $11 move? That means we go up to 532 or we go into 512. I do think that that direction can happen. And showing the charts, I mean, I would think that on the SPY, a quicker floor would be. And I guess this is where a resilience is going to be tested, right? What's this low right here? If that low gets tested and the market bounces, that low is 518. So to me, the floor right now on the SPY is if we break below 518, we could very quickly drop to 510. And that would be like the very aggressive cleansing. That'd be your 3 to 4% correction right there. 518. If we break below it, 518 to 510, I think that happens fast. But this is your indecision. We don't break the highs, we don't break the lows, and we just go, this is your drift. And that's where nothing happens. And as a trader here, if I'm like, well, I need my trade to do this, right? Here's my risk. If my risk is here on the bottom, so this is my loss, and then I have wins on the outsides, right? But if price doesn't go anywhere and it stays right in this choppy zone, if this is my price action over the next 2 weeks, then my risk is going to be fully exposed, right? And
Yeah.
so the flip side is, well, I could do a calendar spread and I can do a butterfly and I can do other things to kind of mitigate some of that risk, which I might consider doing, but I haven't decided yet. I'll think about it probably later today or tomorrow.
Yeah.
But I'm hoping that, it's a new quarter. It's not like April, May should be slow months. I mean, typically, historically, seasonality wise, April, May are good pushes, bullish or bearish. We have good volatility. It would suck to actually see like this bulk of the year. It's like save the slow stuff for like June, July. I mean, right now it's like, okay, man, Q1's done. Q2, let's make something happen. We've got non-farm this week. We have PMI this week. We have CPI next week. We have Fed minutes. Like, give us something to drive these markets one way or the other, man. Let's see if the markets can Give us some volatility.
I think they will,
Yeah.
but what I'm worried about is whatever comes out is going to spike some sort of sell-off. And
You're not wrong. I think that's a great way to think about it. Just because I mean, technically it makes sense, and it's going to be faster. Like I can almost promise this. If we have a sell-off, it's going to be faster, uglier. It's going to seem more violent. You're going to see red across the board. The headlines are going to be flashing like, "Oh, is this a sign of the top?"
and
It's
then
just
you
going to be the
then you
day.
buy.
Right, exactly. But it's like it will feel uglier and nastier than just the melt up we've been seeing where it's like all-time highs, little pause, all-time highs. If we have a sell-off and it's a here's what happens. We have a 2 to 3% day to the downside. That's going to feel terrible, right? But that buy and preferably this would be nice. I'm just saying this is what I look to trade. Let's say that we create a big fat gap for some reason, right? Let's say that the high's in here and then we gap lower tomorrow and this starts to cleanse like we're talking about. But there's a decent gap here. Once this gap is done and that kind of sell off is exhausted, then that gap gives us a target to go fill again. And I would be, like I said, if we come back down to 509 or 58, or we somehow test this Nvidia level, I'm way more interested in looking for that, to come back and fill the gap and then range trade it. Like I'll establish a range, but I think at this point I'm more on the side of the bears need to try to balance this market a little bit better. It's very one-sided, 17 out of 21 weeks. We're kind of priced to perfection on Nvidia, which means we're priced to perfection on tech. And I think it's going to be difficult for this, especially coming into Q2. We have Q1 earnings. I don't know how good or bad it's going to be. And that's going to be the real tell is let's say we have good earnings and the market still sells off. There's your sign of like the correction's in,
Yeah.
or the correction is coming.
And
So, but the floor has to break. That's the one thing I want to keep stressing is yes, it looks like and feels like that a correction should happen. But until this trend line breaks, Frank, until this floor is broken, it might just be sideways. And so I'll take some stabs at it. I'll keep my risk small. If I'm right, I'm right. If I'm wrong, I've got other stuff running. So I'm not sure if you were on the stream this morning, but I did take my gold off. So GLD,
you done with gold?
well, done for now, but I closed out. So I had a 190 call and it gapped up here to 208 and change. I got out at 1735 or 1738, which is about 86% of my max profit. So I'm pretty happy with that because you can see it's down, about $1.70 on the day. So I closed out, right here at the gap high. So I'm pretty happy to close that one out. So, but I think a
I'm
gold
with
reset
you
is
on
good.
that.
Yeah.
I didn't close out, but I did trail. I'm trading GDX though, so it's a gold miners, and I got it last week I think at 30.10, and then lost about close to $1 today, but trailed it at 31. So I could take I'd say a little bit under half
Okay.
of the profit there, or I could just see it go further. So just holding on to that for now.
That is not bad. I'm going to set a chart alarm here on GLD to see if we get to the highs. I'll kick myself, of course, if it's like, oh, it's back up to 209 by the end of the week. But my expiration on this one for a long option was out to May 17th, and so I was around that window where it's like I need to make sure that I'm taking advantage where I'm maxed out at 210, unless I rolled that. But I feel more comfortable. Maybe my next play on gold is I'm looking further out, like
So
buy
you
it
bought
in the money,
calls?
go further out. What's that?
Did you buy just straight up calls, or did you make a spread there,
I
or
did a
what?
diagonal. Yep, I was long the 190 and then I sold the
Okay.
210. So this
All
is
right.
a +1 and this is a -1. Oops, sorry. It's a -1. So I was long, this is the May, and then this was April. So I was long the 190, short the 210, and it was a diagonal, so I was trying to lower my cost basis, but I was all in for like a $7.30 debit and I closed it out for $17.36. So
Gotcha.
overall, I was up about 160% on the position, and like I said, about 86% of max profit, which I thought it's probably a good spot to take some profit.
Yeah.
If we see gold, settle back in, I'll probably reestablish a similar position, go out further in time, or look at some out of the money, credit spreads and just stay long GLD and make it way more risk defined and not as time sensitive.
Gotcha.
So more to come on that one.
I just bought the shares of GDX, so I didn't take any spreads.
Okay.
But I'm concerned about my Tilray move because it expires this Friday, and I cannot get out of it. I could not take any contracts out. So I'm gonna have to wait for this to expire, is what it seems like. When I
What's
put
your
it,
what's your strike price again? Is it like the one? Is it the 150 by 2 or 2 by 150? You're in a bull put spread. What do you win?
yes, it
Okay.
is.
Oh yeah, you got the nines. Right.
It was
What's your bid
9 cents.
at right now? What's the bid?
The bid is 0,
Okay. What's the ask?
2 cents,
Probably. What's that?
2 cents.
2 cents. You could get out at 2 cents. You should be able to get filled at 2 cents.
So I
Is it this
I
Friday?
have yeah, I have a limit order to close out at 2 cents, but it canceled on Friday. I set a new one this morning, so I'm still
Okay.
waiting.
You could try. I'd do this. Try 3 cents. If it doesn't fill at 3 cents, then just hold it to expiration. I don't think we're coming back to $2. I mean, your expected move is probably safe. There's no major catalyst there, but if you get filled, if you want to take the trade off, I think you can get out at 3 cents and see if it fills you. If it doesn't, I would just let it take it to expiration on Friday. I think you'd be fine.
Okay.
I try
Yeah,
3 cents just because that's one above the ask. If you can't get filled there, I mean, it's 1, 1, and 2. You should be able to get filled at 3 cents. I mean, I don't want you to have to take the higher, but at least that's saying, look, broker, like I'm willing to go above the ask price, so you should be able to fill me there.
yeah. Okay. Well, I might do that then.
Okay.
I'm kind of ready to get out of this trade, but
Okay.
yeah, I guess we're at 11:08 now, so I
Yeah,
guess
the
we
time
can
flies,
continue
man.
this.
Which is all good. I need to run as well. I got a webinar to jump into. I got a new course that I've launched this week. I've got some sweet robot action on some forex trading. Let's do this. Let's touch base again this week. I mean, I'm sure I'll be on another 1 or 2 times this week, and we'll see the progress. I'm probably going to end up taking this trade on the SPY. I've got a webinar to jump into, but I like this trade going out to next Friday. So I'm looking at the 523 call and the 533 call. I'm going to do a debit spread there, and then the 522 put by 509. It'd be a 635 debit. Price is right in the middle. I'm still going to watch the Iron Condor today on the SPX and make sure that does what it's supposed to do and hopefully stay above 5230 today. So yeah, a couple things to watch, but I'm going out probably if I'm doing any like neutral direction, I want some volatility. I'm probably going out to the 12th. I think that's probably my safer play is to go out to the 12th.
Yeah,
So
I actually agree with that.
okay, well, look forward to seeing you maybe tomorrow, maybe Wednesday, and yeah, next week we'll have a busy week, but I'll be in town.
I'm
So
sure we'll see you. We'll hook up at some point that week. We'll be around. So
for sure. Okay, all right. Thanks, Frank.
yeah.
Have a good day,
Thank
everybody.
you, Chris.
Thanks, man. Bye.
See y'all.
It's our Edge Finder anniversary sale. If you want 40% off the Edge Finder, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our Smart Money Indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the Edge Finder anniversary by grabbing yourself a copy today on our website a1trading.com.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the Edge Finder for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.